Hello and welcome. It is the 25th of July 2017. My name is Derek and let's do a silver update. This is the monthly chart in US dollars. And I want to start off by stating an uptrend is simply nice moves rising above the 18 average of highs. And a down move, down below the 18 average of lows. So therefore, it's good to note that as this market was declining from its 1980 highs in at around 51 or so dollars, that the downtrend ended in here. And because from this area to what turned out to be this high, it really never did anything below the 18 average of lows. And if it does, it's got to break below it. So it can have some time below it and extra correctionary phases. That doesn't deter or detract the trend. Situation in here, well, this was a failed breakdown in 2008, but because it had a decent decline below it, it's safe to say you can count this as a very short and brief downtrend. And then the one starting in 2013, well, not as brief of a downtrend. So overall, point A, or low in 2000 early time frames, going up to the start of 2008, bottoming at the end of 2008 with some lower prices into 2009, topping in April of 2011, and as it's playing out at this time frame, the last lowest point is in at the end of 2015. If the market rallies from here and we have green candles and a bull market in the 20s moving higher, then what's the bottom going to be? And it's going to be pick your poison or pick your either way. It's either this low, and well, this one is higher, and it's close enough where you could say that the bear market ended here. Either way, it's pretty safe to state, if we go with the lowest level, that it would be the end of 2015. And if it breaks below or even matches this level, which it almost kind of did, but we'll say it actually goes below it, then this would turn out to be the failed breakout, and then the continuation of the downtrend. But again, I'm going through these dates because I'm going to show the Canadian and the Australian dollar. We'll do that now. And within the Canadian dollar, we can see that it bottoms right when silver does in here. And here's a brief move below the 18, and again in here, spending a couple periods directly staying below it, but it didn't. That doesn't count as reverting a trend, no. But the top came in quite near the time frame when silver topped in 2008, and this congestionary low was the same congestionary low of where silver's was as well. The top coming in at the exact same time in 2011 as when the bull market for silver ended. And this bottom is the same as the 2016 start of the year, end of 2015 time frame as well. So it's got a very interesting coordination within the two. As far as this technical analysis is concerned, as we can see within this downtrend, that it had a correctionary phase here, big move lower. It came close to the band here, big move lower. It came back to the band in here, but it didn't have the big move lower. Rather, it stayed for several periods, a little over a year, within the 18 average. I like this as the correctionary phase. So the mode was the downtrend. Okay, trying to stop the bleeding, the down moves from happening. And there's a sideways action. And after a lot of this with a small downtrend recently, after this whatever green candle, good green candle, and another one to follow. Overall, it's going to be how important this holds. We can see just by looking at technical analysis, this will be the key point. But it does look as if the transitionary phases are moving towards reversal of trend, as was the case in here. Especially when it was coming down to this point in here. It was like, ooh, we had the support established in this little area. The band, it was sideways action within it. And then you're coming back down in here. At this point, the band would start to go down. Well, guess what? The band's going to start increasing here with this momentum as long as it's able to hold the key areas. And it's as well as technical analysis, you see moves up in here. Well, now you're starting to talk about having a continuation of decent moves where it will probably make a nice distance area move from this, where we are now, and thus an area you would look for a support point. But again, the whole situation within this is it's showing the reversal of trend, and if this thing works towards making moves back into these much higher areas and does has a very nice bull market where it spends nice time above the 18 average of highs like it did in here, like it didn't here, and like it went below the lows in this stage. If it has that move, which it looks like it's transitioning towards, it's likely gold and silver will go higher. Australian dollar is very similar to this. And when we look at it, we can see, again, it's bottoming in the early 2000s. It doesn't have any decent moves below this 18 average band until after this high, which occurred, well, when silver did. This was a little after the Canadian dollar, but pretty much closer to then. This was almost at the exact same time frame, closer to the Canadian one anyway. And then, just like all these other markets, a huge move in 08, the same conjectionary phase down in here, topping at the same point, and there's its bear market, bottoming exact same time as the Canadian dollar and with silver as well, end of 2015. And within this chart, there has been several hits in around the 77 area and a little north of it. And every single time before, it has been pulling back. And when it's been pulling back, nice low, well, this is where the original low from the bottom is in place. So you have this low at the 18 average. Matching low, again, same thing on the 18 average of lows. This time, again with the 18 average of lows, but is a higher low. And is looking, and has broken out, thus establishing the level of resistance. Well, it's already got a rising 18 average in its early stages. So it's just like the Canadian dollar, showing as if it's looking to start the stages to revert the trend, increase the rate of ascent towards this, and thus test the price actions close to the even par handle. And of course, with that going on, that means silver going higher. At least that's what the trend has been. Let's go with the daily silver chart. And within this, let's first start to talk about failed move, fast moves. I've talked a bit about this with the Bitcoin chart earlier, and for several months and years, I've talked about failed move and fast moves within such. That is when you break a key area, but it just doesn't hold. It comes back to that point, enters its previous trading range quickly. There's this level of support in here and in here. So when it came down to here, it was, definitely a higher low. Noticeably higher, but very close to this. So it kind of makes this range from this level to this level key support as it's making this rally. So therefore 16 and a quarter down to like 15 and 3/4 was a major point. And that's where it stood in here. So there's that big selling move, and that happened quickly. At one time, a huge move down to 14 and change at around 7 p.m. Eastern time on a weekday afternoon with the quick rebound. There's the where it was phase before, and markets have continued to go higher. So now that it's making moves above the 18 average, you got to start to say to yourself, is this a case of failed move, fast move? And I would like to make the case that the bigger the failure, the bigger the fast move can occur. And that was a pretty decent failure. So when you're talking fast move, does this make me think about testing this upper 18.5 situation? And what would a fast move be? Like 2-3 periods doing it? Or a consistent grind higher, like was the case up in this stage in here? Just something to keep in mind. Also, I've been talking about these currency charts, Australia dollar and Canadian dollar. We have a situation short term in today's session where we have an outside day, which means that the highs were higher than the day before. And it's also at highs going back to, before this decent push, so the start of the decent push anyway. And lows that was higher, or lower rather, than this previous day and this day, which is basically an area coming back to what resistance was a few days prior. It's also another situation we can see price action coming back to a newly rising 18 average of highs as it's already established this decent resistance area field, giving good reason, hey, this thing has a good chance of going higher. And when we see history on this daily time frame, at least on the viewable history, when it's making its early moves, breaking above this 18 average, it has some decent gains that it manages to make it up towards. And right now, it would be at that early stages as well. Overall, on any type of moves down, yes, this area will be key to note, but momentum is most certainly pointing towards what I would think to be higher prices moving forward. Continuing further within this down move, when it occurred, and I'm going to show this now in the 4-hour time frame, so let's put that on now. And of course, we can see the big move occurring within this period in there. Let's just think about this on a psychological level. Now, the amount of currency needed to make that trade is extreme, yet it was done anyway. And that means the only ones that can do it would be like your Warren Buffetts, all any rich gurus out there. And I mean extreme rich gurus, or those big, we'll call them investment banking types of situations. And well, we'll just say that they'd be the probabilities. And therefore, they decided to sell based on how the bid orders were placed, meaning that their average sell price will be a lot worse in here in comparison to selling the exact same amount several hours earlier or later when there would be more buy orders available. Thus, that same amount of ounces of silver, which was an extreme amount, wouldn't have taken the prices down from 16 to 14 and a third, rather maybe 16 to 15 and change instead, or 15 and a half. So it was almost like an intentional move. Oh, we're going to scare you. We're going to make it look like silver's a done deal. There's a big seller in the market. Things are bad. And that's the type of psychology. And maybe for a while it was working, because we can see that after markets move up that fast, which will always happen with a quick instant dump, you see it all the time on the crypto game, that the price will immediately move to where it was. And that just makes sense when you say have an order book where it's like 1516 and say 1590. So if I'm going to sell this down all the way to 1433, when I'm done, there's still going to be 16 and it's going to be 1433 on the bottom. So now at this stage, what's going to happen, at least how it works in the crypto game, is these things will start to go lower. And people are going to think, oh, I want to buy cheap. I'm going to put a buy order for $14.50. At least that's what I'll try to do with some of the codes like this. And then no one's going to sell to me, and they hardly ever do. Someone puts a buy order for $14.75. Okay, I'll put one in for 15. And then these things will start to reduce. Okay, I want to sell now. I'm going to sell at $15.80. Next thing you know, a few moments later, we'll get prices that will just work out towards like $15.75. That's practically how those quick moves happen. That's exactly how they happen. So anyway, after that occurred and the prices go back to where it was, that started some fear. So that got a little bit of selling and of course causing a couple legs lower. But since this final point, this low, this low, this low, you got this key low. We have this one that came in today, which shows within the outside day that it broke through this entire, version of this support level. And it also broke past this key resistance area point with a decent push. But overall, it managed to make its move back to this high. Now we've had two small red candle down days. Maybe we'll get more of this sideways conjunction. But overall, it's been making several higher highs and higher lows in place. Let's now take a look at this on the 30-minute time frame. We can see today's move more clearly in here as it broke through this key level of support in here. There's your early sign again for failed move, fast move. It managed to, again, show you the high, which was higher than this previous level. And then it came back to where it came from. And I talked about that. There's about coming back on this on the 2.5-minute warning video. It's been now supported on several occasions. Few resistance area fields in here. Again, a little over 1650 as another attempt to bring it higher. And when you have situations like that, you see it going higher, and that's oftentimes why you don't want to be a buyer, and you want to wait till it gets to this point. And if you did wait in here, you got your buy, you obviously had one chance to get a sell order, if of course you're playing the short-term game. But why that's important to note is the more often you test a key area, the more likely it is that you take it out, which means it is being tested now more often, where the price action is now in at around 1645. Therefore, it's got that chance to take it out. And as it plays out, if you don't get the failed move, fast moves, oftentimes the alternate will be choppy action. And this is exactly what this could be. And it could be setting up what has the potential to get very choppy, really, in the not low and not high 16 range, which is basically 16.25 to 16 2/3. And that's another possibility within it. But when you see the move where you have the big push, okay, this is good. We're looking to come back to a key area and then break it out. Well, you did come back to that key area, haven't broken out, but haven't broken down yet either, because this level of support, which even spreads down to about 1640, is a pretty big level, and anything staying within is just going to remain in the choppy action. But either way, this is making a statement that the break of this overall trend should break relatively soon, and I'm more biased towards upside action as all the analysis that has been shown within this video. Let's move this on further. I still have time. Let's go on to the gold to silver ratio. And this is the daily chart. Generally speaking, when this goes up, that means precious metals, usually both gold and silver, go lower. And when this goes lower, you usually see gold and silver going higher. All right, then. So let's talk about failed move again, because where we see this red line is a major resistance area field that was close to where it came to in the May highs after a pretty decent pullback. And then a retest of that level, pulling back to a higher low. So you can say around 3 tests of the high 75s, we'll call it. And then breaking resistance in here. So that's where the failed move starts. As we can see in here, this is what it would look like with the box. But you break a key area, which it did. and then it comes back relatively quickly. Now, all it's done so far is come back to a key area of support, meaning if you see green candles along the way, of course, on the earliest stages, this band is flattening out, and as it goes higher, it'll come back, and you'll just be talking about what would be another higher low along the way. But if you're seeing price action really falter amongst this point because of the statement made, I'm ready to break a key resistance level and failing, well, then that will give me indication towards failed breakout, which could lead to a fast move to the downside. And looking at this monthly time frame, well, it's just the wild moves that we have seen. Big red candle down. Consolidation, big red candle down. So 4 consecutive decent red candle downs occurred. Sideways 1 and 3 more. And of course, this big move to pretty much cause failed move, fast move to previous high, which is usually where I would expect them to go in most cases. So that would be the end of that play, so be it. We also seen before that when this level of resistance became support, thus new resistance in here, just made its pattern of higher highs and higher lows. But for the first time since that period occurred, it had some significant moves below the 18 average, where every single one of these corrections from this bottom had it such within the correctionary place I'm looking for. Now, a deeper one occurring in 2016. So therefore, it managed to, you can say, back to its correctionary mode in here. Oh, that was easy. Should have been. And then, okay, trying to go back higher again. So I talked about that failed move potential in here. So a situation where you're trying to break above here, you're in this red candle move in here, thus making the band go flat, would state further for more of the failed moves in here. But overall, most likely more correctionary moves down to the 66, and breaking down below that, of course, is where you'd be talking about reversal of trends, because step 1 on reversal of trend, the band flatten out. Step 2, establish support right here. Step 3, come back to the band. Okay, we'll call this in here. And step 4, take it out. Well, didn't test it here. And if this rally doesn't go further and thus creates a higher low here to here, well then thus the play is still intact with a sweeten the pot deal. If you break this support, you're looking at this failed breakout here. So in the situation of declining further on this chart and breaking below into like 62, 63 area, it would have a very juicy pattern because of this that has potential not only for price action to come into this lower area, but for the size of these red candles like seen in here. So that's just basically situational analysis. And of course, on the bullish level, you have your correctionary move from in here. There's a very good correction compared to just decent ones before. And on a break of this key level, and that's a very bullish statement, but that would be what you're looking for on the bullish side. All right, thank you for tuning in to this close to 25-minute video. I hope you found this informational, educational in whichever forms, and have yourself a great day. Bye-bye.